Mm. Are you able to take care of all your assignments already?
Yeah, I was actually doing them like before the call. But like I did some quizzes, so I did like two quizzes. I got A in them, so like I'm just happy, just proud of myself. So I'm just trying to like chill and work on charts.
Okay.
Yeah.
All right. Um. All right. So yeah, I mean, how was the trading week?
Yeah, it was fine. It was actually good. I'll say it was good because let me share my screen. It was, I mean, it was good, it was bad at the same time because I didn't like practically stick to my analysis. I was just getting a lot of biases, so that's something I need to start working on to just trust my bias more. But yeah, this trading week was good. I took how many losses? I took three losses, but I also took three wins. So I took a loss on Monday. Uh, um, yeah, Thursday, two losses on Thursday. Then a loss on Friday. Yeah, that's four losses. So four and three wins.
Yeah, that's good. That's good, right?
Yeah, that's
Yeah. Um. Oh. Oh, what's up, chaotic? I know you work on a project, but okay, yeah. Um. Okay. Yeah. I mean, like, yeah, the 4 hours. So I mean, there's not really much um to talk about. I feel like you're, pretty on side the whole week. Same thing as, um, what we like not predicted, but like,
mhm.
when we called last week, we kind of talked about what we expected for the week, and I feel like it played out for most part.
Yeah.
Um, but yeah, I mean, we'll probably just do the same thing today. I have like some other things to like talk about that I've like that I had to like go through in my notes. Uh,
Mhm.
yeah, because Chaotic just wanted me to like explain my thought process a bit more. Um, but yeah, uh, yeah, should I just start?
Is it of your model?
Mhm.
Sorry, what'd you
Sorry,
say?
what did you say?
Oh, I said like, is it about your model?
Yeah, or like my 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 models. So I don't have my model yet, right? Like I'm still working on mine.
Mhm.
Um, but like whenever I take like a trade, it's like, based on, either ICT's model or TCM's or like something like that.
Yeah.
Yeah, so I just like, yeah, just gotta figure out,
I mean that could just be like, cause like different markets have like different conditions, so it makes sense. Cause if you have just one model, that means you wouldn't be like over trading like every single day. But at the same time,
yeah,
like,
yeah.
yeah, different markets have different conditions and different like models. So I think it's fine.
Okay, let's see. So, All right. Is it starting to record? Porridge.
Okay. Yeah.
Yeah, we can. Just let me know when.
Yeah. Yeah. I can see your screen.
Okay. All right. So, what is today? Today's 16th of September, right? Is the second, like, whatever, like, lesson or not lesson, like, just discussion of price action, things like that. So I haven't been using the monthly as well as other traders have been. Like, they've been using, like quarterly, the monthly, the open low and the high close. So I know a lot of people are like bullish. Just gonna have to see what happens this week with FOMC, because FOMC
Mm-hmm.
could drive price either way, Monday and Tuesday. Probably just accumulate, so play around those ranges. OB model will most likely be present on Monday and Tuesday. But yeah, so we go over this past week's price action. Monday, Tuesday, no news. So Monday, Tuesday, no news, accumulating both sides of the market. And then Wednesday, we sweep sell side and then fall back into this range of these two candles. So, we anticipated a bullish Thursday. We did sweep that area. On Friday, we swept the high and then very quickly just like fell short of closing above this high. So,
I have a question.
yeah.
Okay, so let me share my screen real quick. So my question is, when you about this Thursday, right? Because Wednesday, like sweeping after like sweeping this low, and then there was like, of course, there was this market structure shift on the hourly, so that's why longing, and then OTE. This is why longing was good on Wednesday, but then Thursday, the question is like, why Thursday? Cause like what what like what like brought my idea, or like what was going through my head when you were saying that Thursday there was need for more what do you call it? There was need for more like for more bullish presence, was because after like a sweep of liquidity, market structure shift, then because this is a new delivery, and then is that what was in your thought process when you were like Thursday will go higher?
Yeah. So for me, right, like
Mm-hmm.
I try not to speculate. So like whatever happens on Wednesday, it, so the daily's different. So like right here, 4 hour, right? Let's
Mm-hmm.
annotate. Actually, I might have to we'll do the 2 hour because I can't mark at the midnight. Okay, um, so here is Wednesday,
Mm-hmm.
and I'll also annotate Thursday, and then, oops, and then I mean Fridays. Okay, right there. So, and we already talked about how, what is it called? Monday and Tuesday were just inside days, right? Accumulating. So once I see a sweep of these lows, we were already bullish on the week, right? Especially
Mm-hmm.
after this low that's made on Wednesday, coming from like this order block, and then this like turtle soup area, right? And also this
Mm-hmm.
BISI. So this is the internal dynamic that I'm supporting my bias off of. So Wednesday, I was bullish, so found an area to take a long. And then Thursday, I noticed we drop down, sweep this low, don't close above this. So this is significant, right? Especially in this time window, 8 to 10. What's in there? Market open, also 950 macro, things like that. So I'm looking for the
Mm-hmm.
manipulation down. And also, like pay attention to things like this, right? Dropping below into 50% or a discount before rallying up, and um, taking out this high sooner or later, which it does once. Or did I answer your first question before I get into Friday? So like,
You
so
said it.
okay, so
You
yeah, so
said
if you're,
okay.
yeah, go ahead, go ahead, go
Yeah,
ahead.
you said like it closed below. You say it closed below. Like you didn't see it closed below at the 8 during 8 a.m. So that's why like you told about bullish, right?
Y- Yeah, so for me, candle closures, like candle like body closures through a
Of
low
course.
or
Mm-hmm.
or a high is like very significant, even like
Yeah,
on higher
of
time frames,
course.
even more so.
Mm-hmm.
Yes. So,
Mm-hmm.
but at the time, right? At the time, this was a down candle, right?
Mm-hmm.
So it looks like, oh no, like are we gonna like close through here and then take these lows out? But that's like that's what's gonna distinguish being able to take a lot of these winning trades that expand, like I mean it's like like 100 whatever points, but you need to keep this narrative in mind and what time it is. If you're on side with the bias and the correct order flow, and you take,
Mm-hmm.
you're confident in the open, low, high close, in this case for this trade, then you'll be on side, and essentially any trade that you take in here will be supported with bullish order flow, and you shouldn't be stopped out if you can get a decent like entry. Um,
Mm.
so yeah, I'd say like something that's been like really helping is like just not focusing on super precise entries, but just focusing on where the higher time frame candles are like forming. But it's like just like mentally, like I can see it on the 1 minute. So like I've been like here. Let's say, okay, right here. Let's just use the smaller one actually. So on a higher time frame, which it is right now, on a higher time frame, this is what the price action I would anticipate, right? Like right here on the higher time frame, the candle body will be in here or
Mm-hmm.
below, but there will also be, I could just do whatever, but it'll most likely drop. But the wick will be like this, right?
Yeah.
Yeah, but on the 1 minute or the 5 minute or any lower like time frame, the candles will sometimes do this.
Close above. Mm-hmm.
Exactly, yeah. So, like sometimes you'll get closures above and
Mm-hmm.
then it'll continue lower. So, before I used to, like be confident in this trade. Once I see candle closes above this, I'm like, okay, like I'm just gonna like assume this is like support and look for higher prices, but that's not the case because higher time frame, like in my head, this is just more manipulation, and I need to like be very careful about how I'm trading, um, in that area. So going back to what I was anticipating for Thursday, we we take a sweep of liquidity here, which is fine, and then continue upwards. If this low right here, if this low was at 9:30 or around the time that I wake up to trade, then I could just anticipate price just like already pumping. Um, so I wouldn't really look for the manipulation move. So it's just all about if and thens. If the market gives me, like a sweep of liquidity in a discount, then I can look to enter somewhere inside this wick price action.
Okay. I have another
Um,
question.
mhm.
Sorry to cut you off. Yeah. Why do you use the 2 hour?
Or well, I use the daily's been really nice. I just use every time frame, but I just use the 2 hour here because I couldn't get the midnight for the 4 hour.
Oh, okay.
Yeah. There's no specific. Yeah, but I like to use the like chaotic. He really likes the 45. He's and the 90. Um, So I've been using that too. But yeah, in terms of where like Friday was a very, it's obvious in hindsight. But I did take the short at market open, but it was very like clear what we're doing. Like we're clearing both sides of like this range. Um, I don't know if it might have swept here on NQ and or on Nasdaq, but not on like the futures contract, or you know what I mean.
Mm-hmm.
But anyways, yeah, it's just like accumulating very large ranges for FOMC. So I think with this FOMC, we'll be able to get a clear idea if we're going to be targeting these highs or continuing lower. But
Yeah.
yeah, but I guess that's what we can like kind of look for today. Like let's see.
I have a question. Like, where did you enter? Like, where on Friday?
Uh Friday. Right there.
Hmm.
Let me see if I have the um yeah, let me see. Yeah, right here.
Okay.
Yeah, so um as soon as market opened, or a little bit before market open, I was in my first position right here. So I don't remember what time it was exactly. Like I can go on the 1 minute and see. Okay, so here. Okay, so here I'm just like paying attention to yeah, so like midnight is up here,
Mm-hmm.
right here. Once I see that we sweep this high from yesterday and start just like falling very quickly, um I know that we're gonna be like dropping and continuously dropping, and you can see like bearish order flow is being respected very heavily, right?
Mm-hmm.
Price drops even lower. Da, da, da. Here, I'm paying attention to all the liquidity that's swept with this high, things like that, and then I'm paying attention to this high as well, this high, and noticing how this also sweeps liquidity, is dropping down, bearish order flow is continuing. Da, 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 da. And at 9:30, which is where this happens, I mean, you get this drop here, and you could take a short in here. But I guess the question is like, how do you know that you're not going to sweep like this liquidity and this liquidity before
Mm-hmm.
falling down, right? I that this is kind of where you have to play it by like feeling and anticipation, and watching the 1 minute print is it kind of gives you like a really nice clue. Um, so like I was already short right here after this sweep of sell side, and then or as soon as I see this candle print, I was already in short somewhere in here, and then this is where I put in more of my position um, inside this fair value gap here, uh, and then I just held it throughout here. This is what I meant. This is what I annotated as key right here. So why is this key? This low, or this high, sorry, fills inside this imbalance, fills this imbalance partially, and continues to like like I don't want to say reject, but reject, and then this candle kind of like IOFED on this previous candle's high, making a swing,
Mm-hmm.
and that's why I annotated key. So right here, this is what I just typed in key, took a screenshot, and then I expected price to just fall very quickly. There's no need for price to trail back anywhere further because what do you also have here? Right? So whenever I see that reaction, I just like no, and then you can use the fib and then hold it for lower, which is what I did. I'm pretty sure I used like yeah, there.
Okay, I have another
Yeah,
question.
of course.
Could you go to the 4 to the 10 minute, I'm sorry, to 10 a.m. and like the 5 minutes. So could you spot an entry from right there? What if like you missed your entry on the 13? I mean on the 9:13.
Oh, I see. Oh, I see. I see. Because that's your time, right?
Mm-hmm.
Okay, I can see if I can do that. In terms of entry here, it, like what I would say, like you would just have to find the appropriate what is it called? The appropriate manipulation leg, right? So for me, if you're on the 5 minute, I'd be using a very, very prominent swing or like or price action leg.
Mm-hmm.
So I guess you could just use like this whole thing here. Inside this range, you have your silver bullet, and price is just falling very quickly. Once you get a closure at 10, you're already closed below the 2.5, so you're expecting an expansion to the fourth. So in the 5 minute, after 10, do you use any other time frames?
Yeah, I use 10 and 3 minutes for entries.
3? We can try the 3. I mean, 15 minutes, pretty clean.
Mm-hmm.
Um, yeah, so the thing is, your model consists around the OB model, but you're you won't get an entry with the OB model on trending days or
Oh
large
yeah,
expansion. Yeah,
yeah,
so that's
yeah. It's not practically like OB model I use. I use silver bullet like ICT silver bullet too. So
okay. Yeah,
yeah.
then silver bullet's a little bit different. You sometimes it's present on the 5 minute. It's not always there, which is why I've never um studied it like very specifically. Like we can just find the silver bullet. So order flow is bearish, so you're looking for, an entry that's bearish inside silver bullet time frame. So this for value gap here, that could be your silver bullet. If you don't like that one, this one, I mean, because or I don't know the silver bullet like parameters, but
Mm-hmm.
like anyways, this high is your stop loss for most of these entries. Unless you take an entry here, I'd say studying this 1 minute, you have all of these body closures inside this fair value gap. Once price leaves this range and price does this, I would say any fair value gap that's made in this price leg, you can take short with your stop loss above this and not be scared of it getting ran. That's how I would read this.
Okay.
So then this is permissible. That's fine. But then this is also like if you want to be very very like precise. Oops. Like right there. That's also your OB model on the 1 minute, I suppose. I mean, it's all 1 minute, but 1 minute's pretty nice sometimes. Like right there, you just slam shorts right there, and then um, just watch it continue to fall. You can use the standard deviation here, but it doesn't. I mean, it does hit, but it just takes a little while. But this is crazy because when you take the expansion of a already expanded move, silver bullet zone's a little bit more present. So like right here, price is inside silver bullet zone, but also annotate the time that this happens. Right here, 12:53, which is during lunch, and it's still respecting the
Silver bullet.
BISI. Yeah, or well, at this point it's not. What is it called? Silver bullet anymore. But yeah, like I would just say like for you, like I've been entering on silver bullet zones just with the zones. Like I don't
Yeah,
like
me
if I can,
too.
yeah, like it's so nice because you just have to like
With the
enter,
time.
yeah, time and like in this large area, and then manage your stop loss, all that stuff. But with like like other models, like you have to get so precise, and like you need to get, like you're gonna be waiting for like an entry, like say you have a big fair value gap, you're gonna be wanting an entry like here, but
Yeah.
sometimes it just goes here and then takes off, and you miss it or you have to chase it, which is never a good feeling. But yeah, like we can just go over some like fib stuff, because that's what you've been using, which is kind of perfect because it's what I like. I mean, we can go on the 4-hour here. Actually, I think the 12-hour makes more sense. Yeah, I think the 12-hour. So I can kind of see it already. I've been using fibs for a little while, so I can tell, like just looking at it, like when price hits a certain standard deviation, if that makes sense, or if it doesn't. So here, price is, it's always tough. So price is hitting with this price leg. Price is hitting or crosses 2.5, so you're expecting expansion of 4. But from what I studied, and I don't know if Dexter also says the same thing, I would extend this to this price leg from my studies. Why? Because look at the bodies respecting this, institutional order flow of bullish price action. No body closed like through this fair value gap. So this is actually the whole price leg that I would use to anchor, right? And it also sweeps liquidity, so even more so. So I mean, you can make the same case, but it's just clearer for me. So I would use that and see. Oh, okay. So here, like I said, so on the 4-hour, when I anchor this, look at where price is closing, right? 2.5. But after that, expansion is usually what happens after, but you don't get that here. So why does that happen? Go to the 12-hour. You don't get a body close because remember the thing we talked about, the wicks
Yeah.
and the body closures. So here on the 12-hour, you don't even get that. So now you're just retracing. So it's like, it's like you gotta like be careful, I would say. We can go on like the 15, see what we can find. Yeah, I'll just go. Okay, so I'd say now with kind of far. There's a BPR range. I'd say like yeah. I mean, this is the highest that's been made. So I'll anchor the fib from here, to here and see what we get. Okay, right, yeah, right there. I mean, do we get a close? We don't get a close, right? So those are just wicks. When you get a move from a high to a low or a low to a high, and you hit the 4 standard deviation without a body close, and then you shift in market structure, always refer back to 50% of this range. That's a rule. That
From Dexter?
yes, I'm pretty sure he has something about it. So 50%, 50%. So this could be your high time frame narrative. I mean, yeah, right here. This is 9:30, right? 9:30 happens here. If you have this fib already annotated and it's correct, then 9:30, if you get a shift in market structure to the upside, look to target 50% of this range. Well, this is the 15 minutes, so it's not going to happen like in one day unless it's crazy news. But anticipate the 50% level to be targeted in the next upcoming days, which you get here, and then you can continue bearish order flow or whatever you're expecting, and it does that. So yeah, so now that we've anticipated or now that we've already seen this happen, what's the next step, right? Like how far can price go when you're expecting a reversal? This is where I would use the what is it called? This is where I would use the not the manipulation leg, but the
Expansion leg.
What is it?
Expansion leg.
Yeah, but remember how you used to use this one and not this one?
Yeah.
Yeah, so I would use, I mean, you could use either or. I'm pretty sure it lines up well. We'll do, this doesn't have a wick, but we'll see if it lines up. Yeah, it doesn't line up that well, but just try to, I would try it out. It's when you see, like, this is the parent fib extension. Any fib extension you take inside of the parent extension to the downside, right? Because that's where price is going. You should be using the or what I'd like to do is use the front way expansion right there. Like you hit the 4th right there. And this is
Sorry,
news,
I
so
actually lost you. What do you mean? Could you repeat that again?
so this is what I've been studying a little bit. You see how price has, this is a bearish scenario, how price has made this high and then a low and then comes back into a premium. And if you're expecting sell side to be ran here, then that means you need to use a fib and expand. But because this is a retracement of a larger move down, on the retracements, I like to use the forward expansion leg, if that makes sense, instead of the manipulation. You know what I mean? Does that make sense? Like,
I'm trying to process it slowly. So if okay, but the question is the parent order flow or the first one, right? The first one where we like took out like the 4 standard deviation, right? Yeah, that one, right? Like, after it's 4 standard deviation, it just means that it's going to be a reversal or a retracement. So, like, the likelihood of it, okay, wait. Okay, so you anticipated that it would be a retracement, right? You thought it would be a retracement.
Yeah, so yeah, like see if I can find, let's see if there's any of these lined up. So you have to be, I don't like that one. So here, or let me explain that. Okay, so do you, okay, so let's say this, okay, let's say we're anticipating like this low, right, to be ran, and this low and this low.
Mm-hmm.
So that means whatever happens, like let's say there's a market maker sell model, okay?
Mm-hmm.
Whatever happens at this high, which is what I'm labeling as the parent high, you're gonna have a parent fib extension, correct?
Mm-hmm.
So once you have a parent fib extension, that means you're not gonna want to see price trail above here and take this out. So any sort of price action that rallies into a premium or a sweep of liquidity, I take, or I've been studying to take the price leg that's in, that's not the manipulation, but the way down. So like, so normally you'd be taking like this fib extension, but I've been studying to take this one on price legs that aren't the parent price leg, because this is subordinate to this, and my objective is down lower. I wouldn't say that, like, I would just say like study and see what you find on your own, but like this part makes sense at least, and I can try to share it right now with the examples.
Yeah, it's sinking. It's sinking. But
Yeah,
the
like right here.
another
Yeah, go ahead.
yeah, another question, right? Because on the daily this is a failure swing, right? Like last week or yeah, last week was a failure swing on the daily, right? So
Mhm.
that since like that's so like on Friday, right? You took the fib to the expansion leg.
Mhm.
Hmm. Isn't it meant to be on the other side around?
Yeah, no, but that's the point I'm trying to make, because this price action is nothing but a retracement and a sweep of liquidity inside of this parent action, or this parent
Yes.
price leg, which I've already anchored to this manipulation move. So
Yes.
think about it. Yes, think about it like the candle, like this right here. Right, this is the open, the high, the low, and the close.
Mm-hmm.
This is the open, high, low, or not low, but like the drop
Yeah.
further, and then the close. So anything that happens for me, I'm studying, anything that happens in this part of the expansion will no longer be manipulation. For me, just to make things easier, because there's no point. So if you
Anything that happens in what part of the expansion?
yeah, and the expansion should be clean and like should be easy to see if you're on side. The only part that's hard is this, because you'll get,
Yeah.
manipulated because it's the candle. But let me show the fib. So here, if you anchor this manipulation leg, okay, this manipulation leg, where does it hit? 2 to 2.5 reversal area. Once you reverse, you can take the manipulation of this price leg here, because this, like, I don't want, not objective, but this like zone has been utilized, right?
Yeah.
Yeah, so then you reverse. This is your new manipulation price leg. So you use that. And then you have price, you know, dropping 2.5, da da da. So what is, like, what does this mean? Once you get a closure through 2.5, that means when you trail back up into like this manipulation leg, I guess, right here. Then you can use this idea to frame trades that take, you know, even more like, what is it called? Like, so like here, if you layer this, right? This is your silver bullet zone. This is if you use the, right there, that would be your entry. I mean, this is 15 minutes, so it's different, and it is overnight. But
yeah, I think that's where I traded on Tuesday. But
yeah,
but the silver bullet worked like exact, but like
yeah.
I didn't use like cause like this is getting a little bit confusing how like, cause hold up. Okay, so you know how failure swings, right? Failure swings are what are they? They are manipulation, right?
Yeah. I suppose you could say that. Yeah.
Yeah, if failure swings are manipulation, then like aren't we meant to use the manipulation swing or the expansion swings? Because I use the expansion swing since the call and I've been doing good.
Yeah. So like here, this is kind of an example of, so, okay. Let's see if I could explain this again. It's, this is all theory, okay, right? So here, same thing. We have this reversal. I'm gonna try to make it nice, but right here, reversal.
Okay,
This,
sorry to cut you off, right?
mhm.
Could you go to the bullish order flow down?
Oh yeah, I see
Yes,
this
that one,
extension.
right? So like a light bulb, not like a light bulb, but a question. So why don't you use the other like the expansion for that one?
This side,
Yeah.
well, because this is where, like, you can just, okay, so whenever I'm using fibs, I just go back to the, like, I just go back to the fib that makes sense, and then that's how I line myself up. Like, so let's say I use this one, right?
Mm-hmm.
Instead, it's just, yeah, I don't know. We take that one, that's fine. Fourth is just a little bit short. So yeah, so whenever you go back, like, if you can find just any price leg, and then you can find like the correct like objectives that's been met, then you can just be on side with any of it. So like, let's say, like, you know, like, 'cause it doesn't, let's say you started trading on Wednesday instead of Monday, right?
Mm-hmm.
So you don't know anything that happened on Monday or Tuesday. You just show up on Wednesday. News is like okay, so you don't have to worry. But you don't see any of this. So let's say this is Monday, this is Tuesday, this is Wednesday. Once you see this happening on Wednesday, you can just, you know, look back to prior price action, take like this swing or whatever. See, like, you know, where we've hit. If you've hit it, the 4 like really well with no body close, then look for the 50%. It's just like, just fib anchor where you think is reasonable, and then just use it. So here I would say this is, use this manipulation leg because this looks, you know, highly manipulated, and it also sweeps liquidity and creates a very prominent high and low that you can use, which is why I use that one. I mean, you can use this one, and this will probably give you like some extension that makes this high.
Mm-hmm.
But yeah, like, that's why that's why I'm using the manipulation here, because this yields a reversal here. It could very easily be the other way around. I would have to study that. It could very easily be this one, according to my theory or model, like, which means this, yeah, because this is my parent high.
Yeah.
Yeah, so yeah, that's like, okay, actually that might open up a door for me actually. So let's say we reverse here, which means every buy scenario we would use the manipulation leg. Every sell scenario we would use the expansion leg. Let me try that. So here, every buy we'd use the manipulation leg. Right there. Still lines up. Every sell we would use the expansion leg.
No, yeah, I used to. Hold on.
So what happens here? Another reversal. So now what is this? Another buy. You would use the manipulation leg. I don't think this will be clean because it's just such a large range. Yeah, not that clean. And then every cell would be the expansion leg. Yeah, I'm gonna have to study this actually. This is actually, huh? Yeah, I'm gonna have to study that. Let me type that out. What were you saying?
Yeah, I was saying that I used to use the expansion leg for the buy. No, sorry, selling. But then like you said that it wasn't the right like swing. So I'm kind of getting too much thought process going on in my head.
No, what I told you before, which is the way that it should be. That's how I do it. It's how Chaotic does it. It's how a lot of other people do it. But this is just me studying up on a theory. Studying up on a theory of how to use the opposing price leg.
Okay.
Because I think that's also significant. Because you could, this is what you used to do. This is what we
Mm-hmm.
talked about last time. So
Mm-hmm.
I think
Mm-hmm.
these are both significant. I'm just studying this one, but I use this one to trade. So uh yeah.
Okay, then what about for selling? You use which one? Both?
For what?
Like, do you use both of them for selling?
I'm trying to use both of them, but I still use the first one. Like I haven't
Okay.
put any live trades, like live funds behind the second one.
Okay. Yeah, because like I'm not gonna lie, like the second one is, like I've been doing like, if I could remember when I was trading, uh, I used to use the second one, but there were sometimes like I'll be wrong, and I knew that I was wrong because the manipulation leg wouldn't be the right leg. Sorry, the
Yeah.
expansion leg wouldn't be the right leg. So, mm,
Yeah, man. I guess we just do some what I'm expecting. I'll start with DXY. I haven't done DXY in a little bit. This is looking
this looks like a
interesting.
manipulation. Okay, yeah, this is very, very interesting.
Yeah, I'm gonna have to. I feel like I think it makes sense to see DXY pump.
Yeah, I'm actually bullish on DXY.
Yeah, but I think we
So,
could see it like pump and then fall down for FOMC potentially.
Yeah, we have
Could it
equal
could?
highs. Very was so close to it. So close. Bit of
Yeah, this
volume
looks.
imbalance.
So what does that mean for indices? Oh boy. Yeah, we're just gonna have to see with FOMC. It's not as clear as. Yeah, like we're inside of this range here, so I'm gonna see what it does on Monday and Tuesday.
Yeah.
I have a feeling it's gonna be bearish. I just don't think it's gonna be like this bearish. Oops. I
I
think
have a
it'll do like
question.
a. Yeah.
Um, sorry, I'm just trying to think of what all this asks. Yeah, I have a question about the manipulation, right?
Mhm.
Yeah, so um okay. Do you use like the 4 hour, like there was something like Dexter said about the 4 hour, you use it to
Oh,
um
yeah,
for the
yeah.
low and
I, I think I already, sorry, I don't mean to cut you off, but you mean use the 4 hour to see how we expand on the week?
yes.
Yeah, yeah. I remember hearing that. I was like, oh, that's like huge. Um, but you know, the 4 hour, like, it takes a really long time for price to move. I'd
Mm-hmm.
say, I'd say, I like using like 15-minute, 30-minute, hours, the hourly sometimes. It's just easier for me to keep track of. Like you see, like all this price action. Like if I'm anticipating, so let's see here. Okay, so let's say like, yeah, something like that. So let's say on the 4 hour, you're expecting a reversal here. Then that's perfectly fine because 4 hour frames. Yeah, so Kale just said 4 hour frames to weekly. Yeah, yeah. That I forgot the picture, but I'm pretty sure you sent it a couple times. The one where it shows like what is it called? Like the interrelated like time frames. But yeah, so for me, I don't use I just use the 4 hour in terms of price action. The only fib extensions I use would be on like the 1 hour and the 15-minute, and then the 5 and the 1 for, yeah. Like look for more like, what is it called? Like clear cut trades you could take. So here, this would be your silver bullet zone. That's pretty clean. Just gotta wait for time now. So we're on the hour. So right here, this day is bearish. I mean, you could take a short because you're inside a reversal zone, but you're anticipating this large move. But until then, you could short this inside of this range. What time is it here? 7, 8, 9. Perfect. Jets through, closes below 2.5. Anticipate fourth standard deviation, but on the 1 minute or the lower time frame, this fractal is probably hits the fourth standard deviation. So we can on the 15. The candle's lacking some. Yeah, like, I don't know if I have enough data to go back to the 5. This is in August, but this is your manipulation price leg. And then you get a close. You could just hold to 4. And then here you could hold to 4. But it falls short because pretty sure, yeah. Yeah, yeah. Does that make sense though? and you'd use chaotic in terms of
Oh, okay. Wait, what's that? Okay. Yeah, yeah, that makes sense. Like I had to attend to my sibling, so I saw like you were putting like the standard deviation and the silver bullet on that place, and that was wait, when was that? That was on Friday, August 18th, right?
mhm.
Okay. Let me see. Actually did some this is under 1 hour. On Tuesday, every market structure shifts somewhere. And Tuesday, we have this from my time. Tuesday, we put some. Then you short this. This will be the same. So go up to the four standard deviations. Bit shorts. Yeah, Dexter said something about, if I could remember, he said something about the four and the about the four. Like, if price doesn't like come close to the four, he just, I mean, if price comes close to the four, he still counts it as valid. It doesn't need to be that exact.
Mm.
But does it still need to be exact, or it's just his zone, right? From three -3 to 4, then reversal.
Yeah, it was yeah. I mean, Dexter just sets the frame for like how to use the fib extensions. I think that you could use this in like so many ways. Like,
Yeah.
yeah, like I don't even think you need to like I think you could easily trade I don't know, like like let's say this could be your model. This could be someone else's model out there. Like let's say they only take the price leg of price that hits OTE. You know what I mean?
Yeah.
Yeah, so like that could be someone's model, which is insane because all they need to do is wait for price to fall back into an OTE, then take the extension of the OTE price leg, and then if it works, then all they need to do is wait for OTE, and that would be the only days they trade. Um, I don't know. That's crazy to think about because that could be someone's model, but uh,
So
yeah,
you said something about ranges, like if price should hit the 4 or the 2 standard deviation, we should take the the 4 standard deviation, we should take the range.
yeah. So gonna have to find an example. Let's say. Okay. Okay, that doesn't work. So we just need to find price action that hits a reversal. Uh, okay, do you see here how price it's inside of inside of this reversal zone? Right? Do you see that?
Mm-hmm.
So let's say, so whenever price, okay, so whenever you want to see if you get an expansion to the fourth standard deviation, you need a body close above 2.5, correct?
Mm-hmm.
So, but sometimes you can trade above the 2.5, but sometimes it might just be a wick, and then price will just like take off in the other direction. You've seen that happen before?
Mm-hmm.
Yeah, so same thing can happen in the fourth standard deviation. So let's just assume that this was a different, let's say it was like right here. Yeah, right there. Let's say that this is what the thing actually was. Fourth standard deviation gets hit, very, very, very well. Like it just gets hit, okay?
Mm-hmm.
Let's say you didn't get swept. As long as you don't have like price act, but this only applies if price action reaches the fourth standard deviation and then falls very quickly like away from it. So almost rejects it. So when you see that, very quickly you can anticipate price failing back into equilibrium of the price range.
Okay. Okay, I understand.
Yeah, but it only it only applies like right here. It only
For this
applies,
4.
yeah, but it has to be like the objective has to be like met-ish. Like
Mm-hmm.
so here, manipulation leg, price doesn't close inside, what is it called? Or does it, it's just silver bullet zone. That's right here. After hitting a reversal or whatever retracement area, you get that here. Price goes to the 4 standard deviation, hits it to the tick or a little bit above, falls instantly. You see that wick right there?
Yeah.
You could take this short, targeting 50% of this range, which it does. And then, I mean, it goes lower, but 50% of that range. Silver bullet zone, drops back down, 4 standard deviation there, continues bullish order flow. Like, this happens. Like, this happens. Um,
I also have a
so
question, right?
yeah, yeah.
What would you put like your standard deviation from the high to the low to Thursday's low?
This?
Mm-hmm.
Um, no, no, not really. Just
Like on the
because
4 hour.
on the 4 hour, like this, you mean, or where?
The other one. Let me yeah, let me share my screen. Oh, actually, is it the 1 hour? Let me. Okay, so this right here, Thursday's low. I see my screen.
Uh-huh.
So from Friday's high to Thursday's low. Would you put your fib from year to year
For what reason?
to project like where price is likely to go?
Mm, no, or so no, not really. I mean, you could, and it could play out. You never know. But the thing is,
Mm-hmm.
like you said, it's on Thursday, and and depends on the day, depends on the time, and if there's news, which is also time. But
Mm-hmm.
and also just like the weekly expansion. So I haven't studied or I haven't taken note of it, but I feel like the fib extensions are probably more prominent on days like mm, well, higher time frame fib extensions, days on Monday and Friday.
But then to trade lower time frame, fib extensions are probably best on Tuesday, Wednesday, and Thursday. Does that make sense?
Tuesdays, Wednesdays, and Thursdays. Yeah, it
Yeah.
kind of makes sense.
Yeah, that's just what I think. Yeah, cause yeah.
It kind of makes sense. I'm just targeting this daily fair value gap.
Mm.
That's where I'm currently targeting. Mm. Do you want to trade Forex, or would you ever plan on trading Forex?
Not after what I heard about my Forex funds.
Mm.
Yeah, or I always like, yeah, I always thought about it, but I don't know. I don't know. I did think about it though. I was always gonna buy it, a funded account, but Forex is, I mean, ICT says, like Forex isn't as precise as indices, so might as well just wait. But maybe for fun later on. Are you
Indices
gonna?
more precise than Forex?
Yeah, that's what he said. That's what he said, or says. Because with Forex, you could get hit with like spreads, right?
Oh yeah.
Yeah, things like that.
What ICT video are you watching currently?
Currently, I have this one. This is 2023. I'm just going through that again. I'm this other stuff, and this is just a market review from the 14th. Yeah,
You said the market review and what?
the 2023 mentorship again.
Wait, what? You're watching the 2023?
Hmm. Why'd you say it like that?
Because, like, you're watching the 2023, like, there are lots of stuff in the 2023 that's just weird.
Weird.
Mm-hmm.
Yeah, I mean, I'll always go back to like I always go back to 2022, and then once I finish it, 2023, and then back to 2022. So like for me, it just like the very first time I watched 2022, I was like, confused, had no idea. But then by the time I got to the end of it, I had a pretty decent understanding. And then I did 2023, and then I had a better understanding, and I found like chaotic and like you and like other people, and I just like studied that. And TCM, I watched all of TCM stuff. Amazing, amazing guy. I haven't seen any of this. I haven't watched another one of his videos in a while, but now I'm back to like 2022 and 2023, and like the way he talks about things is like how I would talk about it, and it's almost like I've heard this before ICT, like I don't need this anymore, which is huge for me. I mean, but he still has very like little like golden nuggets that I pick up on sometimes, and that's why I come back here, because if every episode is like 40 minutes long, so there's a lot of information.
Sorry, could you go back to that video?
This one.
Why is he using the black handle body?
Or what?
Like, yeah, why is he using that?
Below.
Mm-hmm.
Because the wicks are significant, but the body, the open and the close of the bodies are where price will most likely like propel or support price. So here, in this case, it's bearish order flow.
Yeah, but that's not an order block, so why would he do that?
You know, that's a good question. I don't have a precise answer for that, except for price just, what is it called? Because this would be the order block.
Mm-hmm.
Mm-hmm.
And took out
So
liquidity, yeah.
yeah, I mean, yeah, he has his reasons, I suppose. I mean, it could just be a line that he drew showing that price hasn't like closed above there. I think that's significant because you don't want to see the lows of you don't want to see lows taken out, or what's it? You don't want to see. Yeah, you know what I'm trying to say. I think. I hope. Let's see.
You
Chaotic's
don't want
typing.
to
He
see
knows.
lows.
Or you know the thing, TCF. The wick is buy side or sell side. The wick is buy side. I think the wick would be buy side, right? The wick would be buy side because this price action here is just all like. But like, why would it lower time frame OB? I see. Okay, so I see. Okay, I gotta test that really quick. I mean, I don't really find anything here besides maybe this. Okay. Not bad. Not bad at all. Let me go back to this really quick. Daily 1 hour. Okay, perfect. I see. That makes a bit more sense actually. Excuse me, so sensitive. I see. But why in this case? Yeah. So this is encompassing both the wick and the body, right? Because it's a lower time frame OB, or an OB on a lower time frame, but we're also encompassing for the wick.
Okay.
Yep. Okay. I see. Oh, okay. So, and then I remember TCM. He says with order blocks, the imbalances take precedent first, but the I don't know what it says verbatim, but always allow for price to come in and hit your order block. So this would be your order block in this case. So just because you close past the, what is it called? The fair value gap doesn't mean that it's bullish and it's going to continue in this case. It's just hitting the order block on the daily and then lower time frame and then falling off. I see. Okay. This is
What's your bias next week?
I don't know. FOMC is always like this doesn't look good. Like all this too. We're gonna have to see. I'm gonna have to see what we do on Monday and Tuesday. Like this is this week's. What do we do Monday, Tuesday? Let me look at the daily. I know we just consolidated or made two like inside days kind of. So here, I think it'll be something like this. Actually, I can't put the wick. You know what I'm trying to say?
Mm-hmm.
Maybe something like that. What do you think? Chaotic? Is that potential? Well, seeing how we trade. Yeah, I mean, I don't even, I can't even say anything because there's nothing about seeing how we trade because it's FOMC. So inside days just accumulate and then FOMC to tell us more.
I'm
Possibly NQ
thinking
didn't
we
take
go to
previous
the
week,
daily
but who
favorite
did?
again. Yeah, possibly NQ didn't take previous week low, but who did? Did ES take previous week's low? Or if you look at ES,
What am I? This not even the. Okay, I don't even know how to do it.
yeah, it's YM.
Oh, nobody did. Okay, okay, chaotic. I swear. Okay, so nobody did. I see. So okay, so he's thinking previous weekly low is the draw. I see. Okay, okay. Hmm. Annotate that.
There's a possibility we don't take that low on Monday or Tuesday. We
You think
just
so?
engineer, yeah, we just engineer liquidity. Then we go for
Let me see.
OTE.
Yeah, we could do that. So like
Yeah.
this. FOMC.
Mm-hmm. Or we go lower, something like that.
But it
Yeah.
could also, yeah, it could also do the other way though, right? We engineer sell side, end up taking buy side
Mm-hmm.
right here, then drop hard.
Mm-hmm. I'm just looking at like just being a hawk on DXY because it's so close to relative equal highs. So close. So I'm trying to look for a sell on DXY because of the seasonality. Also, I watched I don't know, recently I've been watching some of this. It's very, very, very entertaining. Like actually entertaining. Um this guy, I like it because I like this type of videos, even though like it's just a story time. It's based on a true life story. Also, there's a new movie coming up about uh Kevin Gill. Yeah, this type of videos.
Okay.
FRMC would take us either way, but NQ is so close. It's so close. It might take period week low with speed in OVN tomorrow. What's OVN?
Overnight,
Oh,
maybe?
overnight. Okay. Hmm.
Yeah,
Yeah.
that's true. But yeah, gonna have to see
I
how we
don't know.
open. No,
Yeah, I don't know. I'm trying to experiment on. I don't want to experiment on it because like I'm already fine. Oh, sorry. I opened my scanner. I don't know. I don't want to experiment on it because I already know like what to look for and all that stuff. But I'm trying to experiment on ONS because it helps me for one day on Wednesday. But I just don't need it. But I don't know. I'm just trying to. Let me actually. I've sent the profile stuff before. Let me send it one time. That's the profiles. The indicator. There's this one. I think this one is helpful. I'm not gonna lie, this one has been helpful. Do I share this? Okay, shit. Central. I don't know how to share an indicator.
Just put the name of it.
It's not it's a private indicator.
Oh, then I don't know. You might not have rights to share it if it's someone else's, but maybe. I'm not too sure.
Hold up, let me actually check my Telegram. Yeah, it's very interesting. Like I watched it, like it was so crazy. And the music, the pacing and everything is just just beautiful. Yeah, share the URL. Let me get it on the Telegram. So I could get it from TradingView. Dang.
Yeah, I'm probably need to head off in a little bit. Need to eat some food and take care of my dog.
Oh, that's good.
Yeah,
Let
but
me share the link. Okay, I found the link. Thank God. Okay. I'm gonna still do my assignments. That's FYB. Yeah, something that is also interesting before like you leave. Something that is interesting is something that is interesting that I saw was TCM. Like the TCM indicator I sent you, right? You know how like I always trade on the time like 10 and stuff. There's a reason why I always trade on that time. Even though like it's freaking silver bullet, but I trade on that time because of I've backtested it and found that those time like when an hourly like PDRA hits on that time, everything just slaps. Like it just goes straight down. Also with TCM he said it on an hourly. Yeah, so if you look at the are you seeing my screen? Oh, let me just give a quick example. Let me actually. Why am I just logging? I need to remove some kind of lagging. Okay. let me make a new, let me go to this, then we got M and Q. So let me go to the first one. Okay, are you see my screen?
Yeah.
Okay, so the indicator, right? That's why I want to like try to just experiment on it just a little bit. Probably I'll be using it because I don't know it's precise, but if where is it? Okay, take this shit off. Where is it? Oh. Okay, yeah, this is it. Okay, let's go to the hourly first. Screen is low. Okay. So for example, right? Let's say this fair value gap right here. This fair value gap right here is a fair value gap because the wicks are considered as gaps. So this fair value gap right here, then we have this time. What time is this? This is this was on Thursday. So when I saw this in hindsight, I was like, wow, that's clean. So offsets, right? According to TCM, offset starts from 9:45 to 10. That's when like a new delivery is in. So the offsets, after the offsets, then we got like this manipulation again, and then took out this low right here. So that's offset, and then price rallied higher. Then rebalancing macro is from 11 to 130. So we have a fair value gap here. We rebalanced the fair value gap, and then we traded higher. And then the liquidity hunt macro is from 8:15 to 9:45. Liquidity hunts. We also look over here. The same time for liquidity hunts macro from 8:15 to, this was on Wednesday. So liquidity hunts macro. What else? The offsets. This was when I traded the shorts. So offsets. So this was when I traded the shorts to down here. Then the last one, Tuesday. Tuesday was the liquidity hunt. Liquidity hunts macro. Took out liquidity. And then offsets. There was probably an hourly fair value gap here. Offsets, and then rebalancing a fair value gap. Because rebalancing macro is when a fair value gap is rebalanced from 11 to 130, then sell. What the hell? Okay, yeah, that's all I got.
Yeah, yeah. I think your time also like is like really important because it's what's it called? It's another 4-hour candle opening.
Well, I don't know. I want to actually like try to I want to try to test. I just want to try to experiment with it because it looks nice. I don't know. I want to, but at the same time, I don't want to because I'll mess with my times. Because with ONS, you need to like, you need it's like you need to trade like during 8, and trading around that time, I don't like it. I like 10.
Yeah,
It's
that's
like
true.
So I might just like, cause like personally I wouldn't actually. Yeah, I'm actually not going to use it. But the idea I'm gonna be using is let me actually share it. Or share the indicator one time. Cause TCM, right? Since I'm not gonna be using like the ONS. Sorry if I'm taking your time, cause
No, you're
I'm
good. You're good.
training. Yeah. TCM said that from Monday to Tuesday is an ONS on the weekly. So the weekly time, like the weekly candle, right? So think of Monday and Tuesday. So that's like, you know how overnight sessions from 4 to 8:15. So from Monday and Tuesday, that is an overnight session. Monday and Tuesday is an overnight session. Then Wednesday is a CSD, and he said Wednesday is the new week. It's a new trading week instead of Monday, because Wednesday is when he says something like Wednesday is when the algo registers in quotes prices, because registers liquidity is a hidden liquidity. So he said Wednesday, so Wednesday has a range. So if maybe Monday we come back into the 50% of Wednesday, then trade lower. But yeah, I'm just trying to experiment on things. Probably I'll just use like ONS on the from Monday to Tuesday. Like from Monday to Tuesday, like on the hourly. Because that's how it is. Ooh, I can't find it. Yeah, I can't find it, but yeah, that's all I got.
Yeah, I mean we covered a lot of fib stuff, but I really like fibs. But maybe I'll try to get into more like what is it called, mid entries next time, or 5-minute entries. I'll study up on 5-minute because I did used to enter on 5. But yeah, for sure, for sure.
Wait, does anyone use commitment of traders?
Use what?
Commitment of traders. I don't know why, but I stopped using that. Commitments of traders. Okay. I'm gonna stop the recording.